Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro move just a little bit higher after yesterday's almost looked like um, uh, the wick's a little bit too long to be like a gravestone doji, and it's not long enough to say that it's a shooting star. The stops above 119, then turned around and gave up all the gains. The dollar index, you can see here in comparison. You can see essentially like a little mini hammer, the same way that this is a little, uh, almost like a small shooting star. But like I said, the wick is too long, too short to say it's a shooting star. Looking at the cable, we certainly went and broke there and break through the key 2878, pushing lower. Certainly the door's open for us to move lower, although it's been one heck of a sell-off. And the Australian dollar made, after a pretty good strong day when risk had rallied, well, then we pushed a little bit higher and then turned around and gave that back up. You can see here, today we're trying to push up a little bit. Basically been an up and down affair here with Forex. Take a look at the economic data. You can see here we had German CPI. It actually came out pretty early too, along with UK GDP. So we've had some pretty good amounts of data that's already rolled out well before we even started even the webinar here, as well as manufacturing, industrial output manufacturing. Were also released at, which would be 2 a.m. Eastern time. Actually performed better, and might explain why the cable is kind of holding its own, although you would expect possibly a little bit better response here with the cable. But once again, end of the week, markets continue to remain pressured in the overall direction we've seen. Then, of course, at 3 a.m. Eastern or 2 Central, we did see Spanish industrial output along with Spanish CPI came in pretty much in line across the board. And then nothing got Mexican industrial output at 7 a.m. Eastern. But then we will have core CPI once we get into the States at 8:30 Eastern. And that's going to be it, except for Cleveland CPI, which is really a third tier economic piece of economic data. So with that, let's go on and take a look at the news. And just a quick look with equities. We've actually rolled over into the December contracts. You can see the Nasdaq here. Boy, did we see a pretty good sell-off yesterday. Really come apart after this move up in here. Now we're looking at a 5-minute chart, but you can see here we had that rebound, and then we just rolled over. We've come back just a hair here. You can see right here with the S&Ps. Same thing. We've rolled over into the December chart, and then taking a look at crude oil. We really fell apart all the way down here currently right now, $37 a barrel. And then gold really hasn't done a whole lot. We saw a quick jump up in here, but the market quickly gave that back. Really having a tougher time here as risk came off. And let's go on and I guess we can leave that there and just go over the economic, not economic data, but news. Okay, New Zealand's dollar set for big weekly losses, and Aussie treads water. New Zealand dollar was poised for its biggest weekly decline in more than 2 months on Friday, while the Aussie barely budged as risk appetite took a knock from the tech stock rout. The Australian dollar was flat so far this week after falling 1.17% last week, and the New Zealand dollar slipped 9 tenths this week as it's set for its biggest weekly loss since mid-May. Volatility has returned to the markets, particularly equities, with some notable wobbles in the tech sector, ANZ analyst wrote in note, saying it made for an interesting backdrop for the U.S. Federal Reserve's policy meeting next week. U.S. technology stocks tumbled this week as investors reconsidered their high valuations against a backdrop of slow global economic recovery from the coronavirus. On the home front, investors focus next week on the employment report for August, which will show the dire effects of the stricter mobility restrictions in the second most populous state of Victoria to curb the coronavirus outbreak. Economists expect employment to fall by 50,000 and the jobless rate to jump to 7.7% in August, according to the Reuters poll. The surge of COVID-19 cases in Victoria and resultant restrictions carry real concern for the domestic growth, ANZ analyst said. Medium-term prospects are likely to hinge on how fast global activity can resume and how well economies cope with the surge in case numbers. ANZ is mildly bullish on the Antipodean currencies for the month end, setting a fair value or seeing a fair value for the Aussie at 73 and 66 cents for the Kiwi, respectively. The New Zealand government bonds were mostly unchanged at the long end of the curve, but were slightly higher at the short end. The country will report gross domestic product data next Thursday. And the dollar's decline is leaving a bearish imprint on its chart. A steep decline in the US dollar index since March is creating a rare but ominous technical pattern in its chart, which could signal a rebound in the greenback in recent days may be short-lived. The dollar fell by as much as 10.9% since its March high of 102.99. It's creating a multi-year double top, a bearish M-shaped chart pattern containing two peaks and a trough. A technical analysis of the dollar index shows the pattern will be confirmed if the index falls another 5%. Technical market analysis examines chart patterns and past behaviors of the currency and is closely followed by traders, which can make it a self-fulfilling multi-year dollar double top, often preceded by a decline in the currency. We do see that right here. Problem is, like I said, that the euro would come off. Now, obviously, if the euro were to rally back above 119 after it failed and start to push even higher, yeah, we could certainly see that break, but we shall go on and see from there. The most notorious double top for the dollar came in 2001 and 2 in the aftermath of the September 11, 2001 attacks on the U.S. and was followed by a 30% fall in the currency through 2004, and it rallied for about 11 months before it continued to slide to record lows in 2008. This time, the long-term technical signal is compounded by fundamental factors that have already turned many analysts bearish on the long-term outlook for the world's reserve currency. Near zero U.S. Federal Reserve interest rates is a response to its coronavirus case. For example, have robbed the currency of its yield advantage, though roughly the two-year yield spread over the German bonds and Japanese government bonds this year. The dollar's outlook is far from certain, however. The double top is just one factor determining the likely path the dollar can sometimes produce false signals. Seasonal factors also boost the dollar between August and December, and the recent comments from ECB chief economist Philip Lane and President Christine Lagarde in the exchange rate matters for monetary policy may discourage traders from weakening the dollar too far. Moreover, in the short term, some signals remain positive. Recent economic data, such as last week's employment and ISM reports, for example, joined to continue and, albeit slowly, recovering and favor the dollar. Indeed, the dollar's gained more than 1% since its September low, and its decline was halted when it hit a key Fibonacci level, a statistical measure traders believe keeps currencies range bound with support levels when it's falling and resistance when it rises. So we shall see whether that comes to fruition, but we're really open for a little bit further bounce with the dollar, but we shall see. And I'd like to share this story, but I told you we've tried this before, and I don't think, and if I try and print it out in the Twit longer, it won't display the charts, and I don't believe I can share the story. We've tried that before. It's showing up here. Oh, here. Okay, I already have. It says I have to create a Microsoft Outlook profile, I guess, attached to my Reuters feed in order to do that. But I still don't. Once again, I don't know if it would. I hope this didn't lock this thing up. Hold on. Holy smokes! Oh yeah, here we go. Very good. Let me try that to see if it'll work. I have to attach MS Outlook to that to see if I'll run it as a test, see what happens. Maybe I'll do that a little bit later on. Nonetheless, let's go on with the analysis. So the euro posted a moderate shooting star post ECB yesterday. The pair after squeezing shorts may now have some trapped bulls. Resistance will be 1846. You can see we're just about there, with support at 1739 followed by 1688. So 1846, we're just about there. And 1739. And let's go move into the cable. So the cable slid further on Thursday, breaking key weekly trend line 2878. And I got the daily weekly on here. There we go. So cable slid further on Thursday, breaking key weekly trend line of 2878. Support on Friday will be 2725. In case we break a little bit past this 45 area, with resistance at 2890. 2890. Moving to the Aussie dollar. The Aussie posted a near gravestone doji because the body's a little bit wider here. If it was a little bit lower, we'd have that. It's a gravestone doji. It posted a near gravestone doji as risk paired back in a big way on Thursday. Looking outward, support will be 71.60 with resistance at 73.09. It seems like it's a little bit of a drop here for it to get down there, but I just believe that the way this is set up, we saw a strong day here, come back, poked our heads above and came back here. It's really open, and you could not necessarily going to do today, but if we do break, I'm looking for 71.60 on here. So once again, 71.60. And 73.09. Now the Kiwi test stops above 67 cents before relenting as risk paired back. The pair is open to rotating lower over the next few days, but with support coming in at 66.01. Obviously, we're still up here in the stars, but do think we can rotate back down here. 66.01, and resistance will be 66.98. Now the dollar CAD rebounded slightly despite risk pairing back in a large way. Immediate resistance will be 32.34 with support at 31.12. Oh, okay. Thanks, Mark. Appreciate that. Bear with me. Says I can't see the. Oh, okay. Because I was still on the indices. Okay, thank you very much for advising me that. Here we are. Apologize. Uh, Mark says, "Do you think we're on a risk off or a risk on mode?" Well, and now we're on the FX, but but to answer Mark's question, so I do apologize it wasn't on the correct screen. Let's go back to that screen and to give this an overall look here to kind of answer your question. I think you have to open this up a little bit higher. There we go. Now look. We have seen a pretty good little bounce back. Now, this is a bit surprising, but you can see how far we've fallen back. I'm trying to put this in context. So sorry about this. Hang on. We're definitely in a risk-off mode, but we're bouncing back and forth. And what, at least here, when you look here, you can see the move that we have in here and shorting up in here. I still didn't play it as strongly as I should have. I was just a little bit frustrated that I didn't. I don't know why. I think that, and I was kind of reminding myself, you have to have a perspective for the day and your overall perspective for the week. So we saw this big fall, and we saw the rally, and then the market paired back and another rally before we really fell. So you have to figure, the way I looked at it, you have a lot of people that were trapped, and so they're going to use any rally to go in and exit some of those losing positions. We are seeing a pretty good rally back, respectively, and we're looking at the December. So these levels are a little bit off, because what I did was I just rolled it from the September to the December, and I left most of these lines because that way I can just adjust them, and at least basically where it's at. We've seen a pretty good rally off of these lows that we saw yesterday, so it's not bad, but it's definitely a risk off, because you have to figure anyone that, remember how they were. People were just, almost, you could print money. There was, you couldn't even fight this thing. It was just up, up, up. So a lot of people were, even when they fell, you can see the fall here, and then we come back. Oh, this is a great buying opportunity. And then again, you see the market, and as we fell back, people who were trapped or still had equities from up in here, we're going to use any opportunity to go on and exit. And I think the fall that we saw yesterday was more about the people that at the end of last week found themselves stuck. And so as the market came back, they're like, I'll get the heck out of Dodge. And we really saw this throw some of those people off. We can still come back because, once again, the modus operandus has been on big down days. You go on and the market will come back. And you can see from here, and once again, I'm just giving a general overall look of the market, at least the way I'm seeing it. You've already had this big washout here, okay? And then another one here, okay? Saw a pretty good rally, and then here. You pretty much, think of it this way. Anybody who had to sell, they've already been knocked out of the box. You see what I'm saying? So it's not surprising that we're coming back here. If you're looking just for the day, I mean, you could probably go a little bit higher. I wouldn't think, maybe not a whole lot higher, but probably right in here, you'll run into some resistance. I don't think this thing means anything, because, once again, how far you've fallen, if they really were going to accelerate, they would even kept going and have taken out this low. So the market's coming back. It's really not it's not anything to hang your hat on. You see what I'm saying? Like, wow, but look how far look how far it's fallen. So we're definitely still in the risk on mode. Really, it's risk off mode, but it's really more about, I don't want to sound like some of these stories, but in a way it's more of a valuation, but not valuation as to where stocks should be, but a valuation as the price levels that we're at right now. So when you see this monster run that you've had, look at that. You see here, in a bigger outlook, you can say, make the case, well, and then you could see some value buying that would have emanated when they came down in here. But in the very, very short term, think of all the traders that started coming in, let's say back in here. This is when we really bottomed out back in March. We have to even go a little bit further. So a lot of people rode this train from here, right in here, 11,000. So I guess respectively, you can see a decent little bounce off of that. And I think the market is sold out, because, once again, the best way I always look at it is who's trapped. That's really the way these markets will punish you. You can see the same thing in FX. We saw that with the euro when I myself thought the week would start bearish, and the euro did start to break a little bit on, Monday was Labor Day, then we saw Tuesday, and then as the market was going higher on Wednesday, people were really surprised, and I didn't have a dog in that fight, so I'm not trying to talk my book or not whatever. It didn't surprise me in the sense that I thought the euro would have started the week weaker and go weaker. But when it came back, I'm like, well, all they're doing is they've got, ahead of the ECB, they've got trapped bears. And then they pushed them higher, and then the market came off. Well, then on ECB day, they got pushed back up again. But then the market sold off, which we had, to a certain extent, some trapped bulls. and open the door for really the euro can move a little bit lower. But here, the market is so oversold at this point. Anybody that right here is when I think when more importantly the way I look at it is when we came back and here people were like, I knew this was a great buying opportunity. Look at him go, look at him rip. And I remember even in the morning I was shorting. I'm like, I've been put on the chat. I was like, wow, I don't even know I'm shorting. Although I was scalping, I said, the trend is still going higher, which it was, but it was really weird the way it was trading. But I would step in and then it would come back. I'd be able to cover and it keep going higher. But a lot of people were thinking, okay, you see, it's still going to go higher. It's going to rebound. And then the bottom really fell apart right in here. And boy, did it. So everybody that was trapped and they were thinking, we can just get a rally back, those people really got shaken out. And boy, did we get shaken out. And like I said, I played it pretty well as far as shorting it early in the morning, but I really didn't play it as well as I should have. I know Jane did very well, and somebody else did well. They held for a lot longer. But I kept saying yesterday morning when the market was rallying, they go, can it go, do you think it'll go any higher? And I said, because it was rallying, I said, as the people that are short or the people that are stuck, meaning they have their longs, they're going to keep saying, let it ride a little bit higher, let it ride a little bit higher. And that's exactly what it kept doing. Let it ride a little bit higher, let it ride a little bit higher. And then see here, it came down here, let it ride a little bit higher. It came down here and pushed even higher. So I said, those people aren't going to let go until they really start to see the thing break. They try and get the most out of they can out of the stock, the equities, and certainly we did eventually fall down. We saw this pullback. So the market comes back, and then this is where all heck broke loose. And then it extended. So think of it this way. Those that had to sell, those that they've already been forced out. So this rally here doesn't mean anything. So, I mean, we can maybe go a little bit higher. I think you'll see some resistance coming here. Right there would probably be like 376. But I don't think it means anything. But I mean, we're in a risk. It's not so much of being in a risk-off mode. It's just that from where prices are, they got too overextended. So I wouldn't say that oh, we're risk-off today, we're risk-on. That explains the sell-off you saw in the risk-on currencies yesterday, because obviously we got whacked pretty good. But if you think about as far as look how far this thing got whacked. The dollar isn't even that high. It really isn't. I mean, look how oversold the dollars. We should see like a monster bounce, and we're not seeing it. So that story about, and once again, you always have to have a little bit longer perspective, even if you're day trading or scalping, have that in the back of your mind, that story we just covered on the dollar. And you have to think about it. As hard as these indices have fallen, the dollar hasn't even rallied hardly anything. It's rallied a little bit, but not anything impressive whatsoever. Here's the S&P, same thing here. Maybe not as dramatic as we've seen. Maybe not as dramatic, but just as much as the NAS. But look, you can see it's a little bit higher. Like, whoa, look, it's up 40 handles. That doesn't mean anything. And look. Now I wouldn't compare it to this big fall, but look, let's say in here, what's 40 handles? It's absolutely nothing. You see what I'm saying? So I wouldn't get too carried away. We're still overvalued. It's just a matter of people who may be stuck or own will look to exit as we move higher so they can get flat, or being forced out. And I know that you like to look at the Dow futures. I did update the Dow here. So here's the Dow. And same thing here. It's even less impressive. You see what I'm saying? But once again, when you look at it in the bigger scheme of things, and not looking at it compared to this big move, because that's huge. But when you let's just look at this area, right in here, once again, over the course of the last few days. Look at these falls right here. And then rally back up fall. This is nothing. It's just like they like to call it the dead cat bounce. It's not even a dead cat bounce. It's like a dead cat little poof. You see what I'm saying? Now rally back up to here. Now you say, oh, you got a little bit of a bounce. So it's really not about a risk on, risk off move. It's just people that were just stuck and they were forced to sell. We saw a pretty good rally yesterday, and we pushed it. They pushed them as far as they could go. And then once it started to break, the market tried to come back. And it was the second part that really broke the back. And then those people that were stuck in those positions they got forced out. Now all we're seeing is a little bit of a bounce back. Really, basically, some short covering as we go into the weekend. Nothing to be impressed about at all. I think actually you even have to be a little bit careful trading on a day like today because, you could see a little bit further short covering, and I would not read into anything in today's action whatsoever. Because those that were forced to sell, they've already been forced to sell. So do I think that eventually we could make a lower low here? If you look at it from this perspective, let's say you're looking at the S&Ps, yeah, sure, eventually. But right now, once again, this was the, oh my God, what the heck happened move right here. And then we pressed it. Okay, so it's like still, hey, look, I'm long from, just use an example here. Well, I'm long from here and I'm long from here. I've just given back some of my gains. No big deal. No big deal. We'll probably go back again. So that's pretty much just people like, oh, what happened? Oh, well, no, my God, they did pull back. Well, I'm still long, and I mean, I've been long from down here, so it doesn't really matter. And I'm just talking in a grander scheme, is that people with mutual funds, whatever, or the Robinhood traders or whatever, if they, and those might be very, very shorter term traders, but I mean, for the most part, people in their accounts would say, well, yeah, it has pulled back. I mean, it was kind of crazy, but yeah, well, I'm still okay. Well, we did get the bounce back. Now, like I said, those on a more shorter time frame, then when we took this fall, they're like, what the heck just happened? They go, you know what, this is way overdone. We're definitely going to bounce back. And then we saw the bounce back, and I told you it was going to happen. I'm talking about people with that viewpoint. And then we come back and we push up to these levels here, and then all of a sudden, think about those that were stuck from last week, then they got forced out of their positions. So this bounce back is just like nothing. I honestly, unless you have to trade, I probably wouldn't even want to trade today. Because if you get short on a rally here and the market continues to push higher, you're not going to want to stay short over the weekend, so you probably end up covering. So you can continue. This could be a little bit of a grind higher move. You see what I'm saying? And once again, I'm not sure how many people you buy. It's just that the market, once again, usually likes to go in a direction that punishes the most players. We've already sold. I mean, think of it. Who's left to sell? So I'm saying if it rallies here, you're like, well, now this is a good area to get short. Anybody had to get out, they've already got out. They've already been knocked out of the box. I mean, that's the way that I'm going to look at it. So honestly, I probably won't even trade today. I mean, I really don't think I will, because it doesn't even make any sense. Because after this hard fall, it's like, think of it this way, and I'll hurry up and get back to FX. It's like showing up a party, as an example, show up a party at 1:30 in the morning and say, wow, what's good to eat now? And it's like, it's all leftovers, dude. There's nothing left. You see what I'm saying? All it's going to be is the scraps. I mean, everybody goes to parties at different times, but just saying is, let's say you went to go to a party and the party kicked off around 9 o'clock, 10 o'clock, whatever. So you show up at 1:30. What do you think is going to be left as far as the food? You're just going to see a bunch of scraps there. Do you want to eat the scraps? You see what I'm saying? Like, oh, there's a little bit of the dip, like it's all flatted out, and there's nothing. That's what I'm saying. You're here right now. So the big move really was yesterday, and even a couple of days before. Now it's like, I'm here. Let me short the market. Okay, stopped out. Oh, look at this rally. Let me short the market. Oh, wow, it's just grinding higher. I guess I'm stopped out here. Well, let me short it here. Okay, now I'm just up just a little bit, although I've already taken losses here and here and here because you showed up to the party late. So that's what I'm saying. To read into anything into today's action, I think would be a huge mistake. It's just better to say, like I said, I was actually shorting up in here, and even though I was like, wow, I should probably just wait because this thing is still trying to push higher. But I was saying, hey, look, they're going to keep pushing higher because they're going to keep saying, well, if it's rallied this much, let me hang on a little bit more. Took out this high. If it's rallied this much, let me wait a little bit more. Took out this high. If it's rallied this much, and I was saying that during the morning, I go, they're just not going to stop until they can get a little bit better price, a little bit better price. So when they broke here, the market tried to come back, and it was this part, the cascade, that shook everybody out of the box. You see what I'm saying? So those that were forced to sell, they're already gone. And who's going to come in now? You see what I'm saying? That's what I'm talking about, showing up to the party. It's all a bunch of scraps. Honestly, I don't even think I'll even trade today. I mean, it'd be stupid, I think, because it'll easily to get stopped out. You see what I'm saying? And what you can make if you short, it's not even going to be very much because those of us shorted already got stopped out. Now, maybe we see some bigger day, but unless something really develops, it's just it's just late to the party. I don't think we're in a position now to break these lows. Anything could go and happen, but I just don't see it at this point because we already shook everybody out of the box now. So those now from a long term, now next week, maybe if we come up here and we can't do anything here and the market gets frustrated, we get into this area here, just use the Nasdaq, then maybe that opens us up to the next bigger drop, which may take us down to 32.50. But for now, today, I think you're just spinning your wheels, looking to get something, looking for something to happen. You're not really, I mean, if you come in right now, you're not really rewarded. It's a little bit later to come in now to get long. And if short, well, they can just, you see what they can just keep grinding against you. And you're like, so once again, you're not getting really paid on either side, and you're in the middle of no man's land. You see what I'm saying? So it's just, to me, I think it's a poor risk reward really on either side. But enough of that. Let me go back to the FX. I hope that helped. So looking here on the dollar CAD, the dollar CAD rebounded slightly. And here's once again, like I was telling you, a lot of people have been saying, I can't believe this dollar CAD won't rally. And they're right, because in the past, you would have seen a big, look at the fall that we just saw, that we were just showing in the Nasdaq, S&Ps, YM. And look at this piss poor rally. You see what I'm saying? So that story that we're saying about the dollar, remember we said the big double M, and this could break. It won't happen today. May not happen next week, but it's really open to coming. I mean, who would have thought that when these indices really, really fell, we should probably see at least, honestly, at least a 3, if not a 400 tick rally in the dollar index. And we're just, it's nothing. You see what I'm saying? People aren't even being rewarded. So yeah, we will be open, I think, over the course of the next 3 weeks, maybe, to break to new lows in the dollar index and really start to cascade lower. So anyway, and once again, it's not a matter of me. I'm not a prognosticator. I'm not looking, saying, oh, this is what this will happen. No, it's like, once again, show me, it's just the thing, show me what you got. You see what I'm saying? If this is the best you can do, I'm talking about the dollar index, in a pretty good little sell-off, although we were very extended in the equities, and this is the best you can do, I mean, that means that you got nothing. So the door's going to be open for now this thing to go on and break further. For the dollar index probably to go blast down to 86 or 87. Like I said, because once again, if this is the best you can rally when markets are getting, pummeled pretty good, what happened to the run for the safety of the dollar? You're not seeing it, because once again, the where the rates are right now, we don't have that yield differential advantage. But once again, and look, the employment came in a little bit better than we expected. ISM, and still, once again, it's still piss poor. So anyway, I think we already notated this here. 31.12 and 32.34. So I mean, I hope that provides an overall take of where we could go. A moment. So the dollar peso fell to not 21.20 on Thursday before posting a bounce to 21.35. Resistance will be 21.44, with support at 21.28. And look, we're already sliding back down. You see what I'm saying? I mean, look how much this thing is falling. And now it gets a bit of a bounce. It can't even fall through the bounce. It's just like, it just kind of lifts its head and just falls right back down again. That's the saying, the dollar looks like it's really going to come under some pressure in the next few weeks. Some pretty good doggone pressure. And I'm not prognosticating. I'm just looking at the technicals. And really, I don't look at all these esoteric technicals. I just look at the levels. And also, like I said, if this is the best you can do in this environment, man, you are going lower. You're going much lower. You're going to hear the submarines horn honking. So we said 21.28, which looks pretty bad right now. And 21.44. And the dollar is just dead as a doornail. I mean, we're just absolutely not going anywhere. Dollar continues to meander. Resistance will be 558 with support at 658 with support at 588. We already had that. I think we had that from yesterday already, so no changes. See, let's go to the cash dollar index. I mean, that's insane. But look, it's rallied. That rally is pretty crappy, and that's using a more moderate phrase. I mean, come on. Look how far this thing has fallen out of bed. Okay, now, of course, it was pushed so much higher because of what had happened with, the dollar shortage. So let's go back to here and take the average. Let's see if it did right down here. Let's take it from here. So remember, we traded so long in that 99 area. So go look at this. From 99, you fall 700, more than 700 ticks. Okay, 700 ticks. Now look at the fall we've seen in the equities. And this is the best you can do? Basically rally 125 ticks off the lows, maybe 150. I mean, honestly, this is where we should, considering where we've fallen in indices, this is where we should be in the Dow Index. Should be at 95, right here. Maybe even we would have pressed our head above there. So maybe we make it up to about 96.37. Look at that. We're 300 pips, 300 ticks lower than where we really should be. And that's considering the fall. So when you saw how much the indices fell, and look how the dollar's fallen from here, at least get us to frickin' 95. You see what I'm saying? At least there, we should have already seen that, and pretty closer to 96. And look how weak. So this market looks like it's really open to make it another leg lower, which probably run us down to about 87, 86. So, and that kind of plays into that story that I was just sharing to you on Reuters. And once again, it's not me saying, oh, look at my crystal ball. No, it's just saying, if this is the best you can do, brother, you're in bad shape. You're in bad shape. So the dollar index posted a mild recovery as risk sold off. Resistance remains 93.89 and support at 92.98. So we've had that same 93.89. Once again, it can't even go up there. I mean, it's just like it tried to get up there the other day. I think it got up to 68, rolled back, and look on this right. We could even challenge the highs up in here with the sell-off we saw. So this dollar's in a lot of trouble. So the only thing we think here we got to, I think we put 88. Let me take a look here. Or maybe it was 98. But once again, if you're trading indices, or really if you're trading today, I think you have to be careful because of the moves we've already seen. We'll get to the cross rates, but I'm talking specifically, like in the indices. We've already seen the moves. Everybody that could be forced out has already been forced out. So once again, I like to speak in analogies. Basically, think of yourself as you're showing up to the party at 1:30 in the morning. I'm not saying people party much longer, but I'm talking about conventional. There's going to be some food or a lot of food. You're showing up at freaking 1:30. You're just going to eat scraps. That's all you're going to do. You're just going to, there'll be some moldy dip. There's going to be some, crappy chips, maybe a little few things, the snacks spread around. You're basically showing up. What do you think you're going to get at 1:30, 1:45 in the morning? Just with the leftovers of what everybody already ate. So what are you going to do is put yourself in that situation. I'm just saying is you're better off to reset, reload for the coming week. It's the same thing with the dollar. Just like the dollar, once again, if you look at the technicals and how far we've fallen in indices, this dollar looks freaking pathetic. I would say we're going to break to new lows and when we take out those lows in the dollar, we should be able to take it a real fast 250 ticks right off the bat once we hit those new lows. I'm not saying they're going to happen this week or next week. It probably should be coming up. And once again, I haven't really paid that much attention to the dollar, to be quite honest with you. So it's not something I've been thinking of, but I'm just saying is if that's the best you can rally when you've seen the sell-off in indices, man, you're in bad shape. And that tells me this dollar's going a whole heck of a lot lower. So looking at the cross rates on the Kiwi yen, at 71.08, we're going to stick with that. And on the downside, 70.15. The only difference is it's going to be right there, 70.34. Going to the euro yen. And I'll do this one last thing just to make a reference to that. Look at the euro. It's even stronger right now. So here's what I'm talking about. So we see this dip, and I'm thinking at the beginning of the week, now we're going to finally rotate lower, okay? We come back and we squeeze out some ahead of ECB. We squeeze out some bears, okay? And we get the ECB. We push up here, and we gun the stops at 19. And look at this. Look at this. This is like, whoa, we're going lower. If you look at this, we're going at least down here to 1658. Look at this crazy thing. It's actually pushing higher. You see what I'm saying? So once again, if we hang around here, and if you look at it from technically, you think, well, this is open to going lower now, because look how they finished here and they finished on their lows. If this thing hangs around here next week, man, we're just gonna go zooming higher, which is reverse of what the dollar index is doing. So once again, look how they got up in here. You must have trapped a lot of bulls, and instead of them being tested, we've held the lows and we're still continuing to push a little bit higher. Not a whole lot higher, but you see, then you think about those that might have bullish positions. They may not have bought the very top. They're like, you know what? I'm just going to let it ride it out. I'll just put my stops just below there. So that's what I'm saying is the way I'm looking at it is we're still continuing to push higher, and these guys should be trapped. And the market is starting to go their way, even though the sell-off we saw really should have opened the door for them to at least test lower, and they're not doing it. So anyway, enough of that. That's the perspective I wanted to go in and share on that. Let me go on and go to Euro Yen now. Sorry, probably long-winded, but I just thought at least that shares a perspective that we're thinking about. Taking a look at Euro Yen. See here, look, now that is like a Greystone doji, except the wick's still a little bit long, but look at that. And you see, we should have tested the stops down here. Look at that. It's just moving higher. And this is like bananas, you know what I mean? So it does show that it's got some good underlying strength. And once again, it's probably ultimately going to be getting resolved to the upside. We did have on the upside, speaking of which, 25.83 now to finish the week, which is going to go right there with that high mark, which is going to be 26.27. And the support, which would be just coming across here, right there, be 25.50. On to the euro odd. We're doing a whole bunch of nothing at this point. We saw a pretty good strong rally, and they were kind of giving a little bit back. That's going to be the resistance right there, which is 62.91. And support right there, come across there, which is 62.29. Euro Kiwi. Not doing a whole lot either. Support to be 78.02. Not support, but resistance. And support here at 76.72. Once again. Right there, which is going to be that bar right there. See right here? It's going to be 77.61. And support is going to be the level here, 77.12. Pretty good fall here we've seen. I'm not sure how much further we'll push it, but the support will be the low from yesterday, which is 35.52. Resistance is going to be the low here from this bar, 36.74. And sterling nod. Boy, these are really falling out of the. Holy smokes. Right there. See that bar right there? 74.85. It's falling like a freaking stone. Support resistance be 75.94. Okay, and that will do it. And thanks for joining us here on the European Crossover webinar. I'll get the buys chart posted, and we'll see you there.